Hi guys, if you can hear me, just send a hi. I hope you can hear me. I think I just started the stream. Okay guys, so let's start today. Today we are going to learn about, I think you can hear me right, and if you can see the screen, just write yes. Okay, just give me 1 second. Okay, so in the last session we learned about um, how to put orders, what is a watch list, what is long, what is short, and vice versa. We learned about all the things, right? Basic market jargons, types of orders, and everything. Today we are going to learn about risk reward ratio. What actually is a risk reward ratio? A risk reward ratio marks the prospective reward an investor can earn every rupee they risk on an investment. In easy words, so if you are risking, for example, 2 rupees, how much you are earning? You are earning 4 or you are earning 6? So it literally depends. So this is what actually risk reward is all about. The total loss versus the total risk. Okay, the total risk versus the total reward. So for example, if you are willing to risk 1 rupees, which is rupees 1, how much are you willing to earn? So for example, it is rupees 7. So risk reward of 1:7. Similarly, chalo, I'll just show you a board where I've written all the notes. Risk reward ratio. In simple terms, what is a risk reward ratio? I'll explain. Okay. Ratio of the risk you take versus the reward. Ratio of the risk you take versus the reward. Let's learn it through a case study. Okay, so we are going to learn about case study, what actually this is. So for example, there are 2 people. How many people are there? There are 2 people. First is Raju. Raju is a trader, and second is Varun. Varun is also a trader. Okay, Raju buys one stock of Tata at rupees 5. Varun also did the same. At rupees 5, he bought a stock. Risk was rupees 2. Risk was rupees 2. How much was the risk, guys? Rupees 2, rupees 2. Now he makes a profit of rupees 5. Same here, he makes a profit of rupees 5. 10, sorry. So what is the difference in both? Just like look at this. Both buy at 5. Okay. Both buy at 5. Both have a risk of rupees 2. So if they have loss, they have a loss of rupees 2. But over here, if Raju makes profit, he makes 5, and over here, if he makes profit, he makes 10. Varun. Okay. Let's look more. He loses 2, he makes 5. Okay, just look at this way. He loses 2, he makes 5. He loses 2, but he makes 10. Okay. So what do we learn from this? We learn a theory, okay, that even if you are losing the same, you should make more. Okay, what you should make, even if you're losing the same, like for you are losing 1, you should make at least 2 to survive. We learn this from this concept. Now let's just go more deeper in this concept, that what actually is a risk reward ratio. So let's learn through this concept known as 30 days in a month. So this concept will tell you why we need this and how can we put this risk reward in brokers and all. Total number of days in a month, how many are there? 30. 15 days in a month you make profit. 50-50 chances. 15 days in a month you make loss. 50-50 chances. So if I say you 50-50 chances, you will be like, sir, why 50? Why not 60-40? So let's learn this 50% ka theory from a coin. When you throw a coin, heads and tails, chances are, one time you throw a coin, either it will be head or either it will be tail. 50% chances. Support for yes. If it is 50% chances, just write yes. In very simple words guys, आपने coin throw किया और head या tail आने का chances कितना होता है बताओ. What are the chances that it is a head or it is a tail? Explain. 50-50, right? The chances are 50-50. Similarly, I take this to my concept of 15 or 30 days. In a month, total number of days are 30. Okay. 15 days in a month, you make profit. 15 days in a month, you make loss. Okay. Whenever you make profit, you make 1 rupees profit every day, which is total profit 15 multiplied by 1, which is 15 rupees. 1 rupees profit every day, total profit 15 multiplied by 1, which is 15 rupees. When you make loss, okay, let's just first do this. When you make loss of 1 rupees per day. Okay, total loss 15 multiplied by 1, which is 15 rupees. So here the concept is break even. Plus 15 minus 15, look at this, plus 15 minus 15, कितना हो गया? Plus 15 minus 15 everyone, it is 0. So the concept is very easy. We need to follow risk reward. Here the risk reward is 1:1, 1:1. Total number of days in a month is 30. 15 days you make profit, 15 days you make loss. 50-50 chances. 1 rupees every day profit for 15 days is 15 rupees, and 1 rupees loss every day is for 15 rupees. So overall you are at 0. What if you are a good one? You are Varun. You are not Raju. You are Varun. What if this? Let's see. Here also guys, same concept. Total number of days are 30. 15 days in a month you make profit. 15 days in a month you make loss. Right? 50% chances. But here whenever you are making profit, it is 2 rupees per day. So 15 days you make profit multiplied by 2 equals to 30 rupees. When you lose less, which is 1 rupees per day. Total loss 15 rupees multiplied by 1, which is 15, and this. What is the total conclusion, everyone? What is the total conclusion? Can you say in the chats? Whenever you make profit, at least do 1:2. So what happens? 1:2, you make profit more than your loss. So loss is 1 rupees, make profit at least 2. So what happens in trading is, For example, even if you play this 50% chances wala probability, even if you are correct for 50% times, if you do this risk reward, you will end up in profit. How? 30 rupees profit, 15 days ka profit 30 rupees, and minus 15 days loss, because we lose only 1 rupees and we make 2 rupees. So just do the maths. 15 days 30 rupees plus 30, 15 days loss minus 15, which is equals to total net 15. So the logic is always follow 1 risk reward 2, matlab 1:2. What is 1:2? Basically you are losing 1 rupees in case of 2 rupees. So at least whenever you lose, also lose 1, and whenever you're making, make sure you make more. So if this chances is also 50-50%, I know you will be making it at least 80%, you will be predicting right that a market will go up or down. If this chances is also 50, you can survive in the market. So overall, this is known as risk reward ratio, where ratio of the risk you take versus the reward it is. Understand it, guys? Please write yes or no if you can understand this, and if you have any doubts, please ask the doubts. If you have any doubts, please ask the doubts. Okay, same happens with the PDF. The PDF suggested us basically the theory, what part it is, I'll read. The risk reward ratio marks the prospective reward an investor can learn every rupee they risk on an investment. Many investors use risk reward ratios to compare the expected returns of a investment with the amount of risk they must undertake to earn these returns. Consider the following example, guys. An investment with a risk reward of 1:7. An investment with a risk reward of 1:7. Okay. Suggests that investor is willing to risk 1 and prospect of earning is 7. Okay, I can understand that there's one question popping up in someone's head, that we never know that we are going to win or lose. Correct? Then how can we put this risk reward? So dear, even if you don't know, you can at least take this now, that your reward is more than your risk. Your risk is very small and your reward is more every time. So I expect 2 times you fail but 8 times you are correct. 2 times you are failed but 8 times you are correct. At least you will have more money than your risk, right? Nivya, that is according to Opstra. When you're option selling there, it will directly tell probability of profit, calculating all the maths. Or else, even when you are trading, you will get to know what is the probability. Okay, so we'll come to the technicals later. Learn this right now. Now comes to Bank Nifty or Nifty. What will happen in Bank Nifty or Nifty? Okay, so for example, Bank Nifty or Nifty, you need to take, for example, your stop loss is 10 points in Bank Nifty. What will be your target for 1:2, everyone? Jaldi se batao. Like Nitish Nigam sir is asking, 1:2 risk reward, 10 points is the target or 10 points is the stop loss. For example, what is your target should be? Let me know in the chats what should be your target. If your stop loss is 10 rupees, it should be 10, it should be 20, or it should be 30. 20, simple, minimum 20. So it's very common, Nitish Nigam sir, that if you are losing 10, at least make 20, so you can sustain the market. Else you're just losing 10, 10, 10, 10, 10. You can lose more. See, losing 10, then again losing 10, then again losing 10. For example, 3 times you lose 30. Fourth time you make profit of 10, because it is 1:1, right? Let's see, 30 lost, 10 added, which is again minus 20. Let's see what happens when you follow my rule. You lose 10, okay, same here. You lose 10 rupees, you lose 10 rupees, you lose 10 rupees, you add 20 rupees because of risk reward. What happens? Minus 30 plus 20, you're at least at a lesser loss. So this is the thing. Recording it is available on our Telegram group itself, dear. So guys, this is the thing of risk reward ratio. Always make sure that your risk is 1 and your reward is not 1. It is at least 2. So 1 rupee minimum risk and maximum reward should be XYZ. Minimum should be 2. So 1:2 risk reward ratio is very good if you want to sustain in the market. I hope it is clear to everyone now. Now let's go. We can learn about what actually risk reward can be done through here. So for example, you want to know that if the market is going up, like for example, let's take bank nifty, okay, this area. Let's talk about this, okay? This is bank nifty. Right? This is bank nifty. Now just check this out. I go long over here. Okay? Long means I told you in the last session, right? And my reward should be like higher side because I'm playing long. Risk is, for example, this, okay? Now it will automatically tell me what is my risk reward. See what it is saying right now. Check this out. For example, I place it over here. What it is saying, guys, 3.97. What is my risk reward right now? For every 1 rupee I'm risking, not in bank nifty. Let's check out LIC India if you are a LIC fan. Okay, let's check out anything, any stock. Okay, any stock, not about index. You're taking this trade, your stop loss is like this and your target is like this. You just click over this and you see how much is the risk reward right now? 2.23. What if I increase my reward? Now it increases. What if I increase this? It is decreasing. So always make sure that this risk reward ratio should be greater than 2. This value should be greater than 2. So this is the right way of trading. So whenever you're losing only 1 rupees and you're making minimum, you're making 2. It depends. Okay, for example, I can understand some people would say, sir, it is not necessary na our target will hit. It is not necessary our target will hit. So Baba, at least you tried your best. So trying your best and not trying, which is better? Trying, right? So at least try your best. Okay, at least try your best. Any doubt till here, guys? Please ask if you have any doubt. How to draw the lines and how to make everything, we will tell you in the technicals area, guys. How to take trades, how to know if it is going up, if it is going down, we will learn in the technicals, not now. Today we are learning about the concepts known as risk reward ratio. Okay, now let's see, there's another concept that is known as, okay, now you know risk reward, right? Sir, if I want to buy, I need to buy. Okay, I am buying. My target should be 2, 4, 6, 8, but not 1. Okay, my loss ka double should be my target. Now let's see position sizing, and doubts about the technical analysis area will be solved in technical analysis session, not now guys, not now. Okay, let's see position sizing. What actually is position sizing? So position sizing refers to the size of position within a particular portfolio or the dollar amount that an investor is going to trade. Position sizing refers to the size of a position within a particular portfolio or the dollar amount that an investor is going to trade. Investors use position sizing to help determine how many units of security they can purchase, which helps them to control the risk and maximize returns. So in one word, what is position sizing? What is position sizing in one word, guys, if I want to explain? In easy words, it is total number of shares to buy. If I want to know that I want to buy XYZ number of shares, how can I know that? What does the rule suggest? How many shares to buy according to the rule so that you can become a profitable trader? In easy words, this is the case. Okay, in easy words, what does the rule say? How many shares to buy according to the rule so that you can become a profitable trader. Now let's see a case study again. We have two guys. One is known as Raju. Okay. One is known as Varun. Okay, sir. Raju had a total of 10,000 rupees in his bank account. Varun had a total of 10,000 rupees in his bank account. Okay. Now Raju used to lose 1,000 rupees per trade. So whenever he took any trade, Raju lost 10%, which is 1,000 rupees. But at the same time, Varun also had 10,000, but he used to lose only 100 because he was restricted to this. He had a rule that if I lose money, my maximum loss should not be more than 100. So he had a risk of 1%. At the same time, this guy had a risk of 10%. Right? Now tell me, who will end his journey first? Both have 10,000 rupees, Raju and Varun. Average loss per trade over here is 1,000. Average loss per trade over here is 100. Who will end his journey first, Raju or Varun? Tell me, guys. Raju, right? Why Raju? Because he is losing like nothing. He's just losing 10% every trade. So he can take maximum of 10 trades, 1,000 per trade loss on total capital divided by total capital 10,000. He can take maximum 10 trades. Raju will lose in 10 trades. So if Raju took 10 trades, he will just get his account to 0. But at the same time, if there are 100 trades over here, why 100 per trade ka loss? How much he is losing? He is losing 1% of capital every trade. So 100 per trade loss, total capital 10,000. He can take maximum 100 trades. Now Varun will lose only 100. See? Again I'll explain. This guy, Raju, used to lose 1,000 per trade, 10%. Okay. So he can take only 10 trades through the maths we did. But over here, this guy used to lose 1% at a time. 100 rupees. So he can take more trades, he can take 100 trades. So he will lose after 100. So what is the conclusion? Don't be Raju losing 10% every trade. So you can only trade 10 times and you will lose everything. Be Varun. Is it okay, guys? Did you understand this? This is the concept of position sizing. Let's see how to find out how many shares to buy. So total loss per share, this is the formula everyone. Total loss per share equals to buy price minus stop loss. So for example, my buy price is 339, my stop loss is 338. Total loss per share is 1 rupees. I'll show you in the PDF itself. Let's assume your capital is 10,000 and you are willing to take 1% as your position sizing. Okay, so 1% of 10,000 equals to rupees 100. 1% of 10,000 is equals to rupees 100. We give a call, Tata Motors, say buy at 339, target is 342. Buy at 339, target is 342. Stop loss is 338. Okay, stop loss is 338. Now your position sizing for this trade should be 100 quantity. How? Use this formula. What does the formula say? What does the formula say? Just give me 1 second. Okay. Total loss per share. Okay, the formula says total loss per share को calculate कैसे करना है? How do you calculate total loss per share? Buy price minus stop loss. Subtract buy price from stop loss. So I am buying at 339. I am selling. My stop loss is at 338. So of course you will not wait till 0, right? If you are buying at 700, you should have a stop loss. Target, if it goes up, target, if it goes down, stop loss. Of course I'll not wait till 0. Same over here. Total loss in a capital is 100. How? See this. You have 10,000 rupees in your bank account, right? You have 10,000 in your bank account. 1% of 10,000 will be, calculate guys, how much 1% of 10,000 will be? Let me ask. 1% of 10,000 will be 100 rupees. Okay. And after you know 100 rupees is your total loss in capital per trade. You cannot lose more than this. You can only lose 100 rupees per trade. How do you do this then? Calculate this. Total loss per share, buy price minus stop loss, 339 minus 338 equals to 1. Now the final formula is number of shares to buy, okay, equals to total loss per share, total loss per trade. This is the formula. So in easy words, you are buying at 339. Okay, stop loss is at 338. Calculate how much is your stop loss. I calculate this is 1 rupees. Okay, now I know my loss per share. Even if I lose, my per share loss will be 1 rupees by this formula. Okay, my per share loss will be 1 rupees by this formula. Now I need to calculate 1% of my capital. So 1% of 10,000, which will be 100. Okay, now I know my per share loss is rupees 1 and total loss I can afford is rupees 100. So how can we calculate? Just divide both of them over here. I have done it. So it is 100. Now if you want to know when should be taken trade, when to buy, when to sell, when to put SL, where to put SL, okay, I will be telling it soon in the technical analysis session. Let's first learn risk reward. Okay, what should be target, and let's learn position sizing, how many shares to buy. Position sizing is all about how many shares to buy. Don't be this Raju guy losing 10% every trade because you have bought too many shares. Be this guy Varun. So even if loss happens, your loss should be that much only that you can afford to take more trades in the future. And this is the formula. Now you will say me that sir, what this is, समझ नहीं आया. Okay, I have a automated formula. So you'll be like, sir, why did you waste our time? So guys, the automated formula is, go to this trading view software. I'll be telling in later how to put this. Just check this out now. Long position means you are thinking market will go up. Okay, just give me 1 second. Long position means you are thinking market will go up. Okay, you just put at your buy price. See, so for example, I think I'll be buying it somewhere over this place. Let me just turn into candles. Okay, now good. So I think I'll be buying at this price. I put this over here. My stop loss is at this area. My target is this. Okay, I put my target, stop loss and everything, and then I double click this and I see this box, account size and risk. So now I'll put my risk. Risk is 1% of total capital and account size is 10,000 rupees. So this will automatically tell me how many shares to buy. This is easy, right? Now this this says me 71 quantity, which means after following all the rules, 1% risk reward, I can still buy 71 shares. Total loss per share is 1. Abhishek. Guys, if you can understand this, please write yes. If you can understand this, please write yes. Okay, thank you. So this was the concept of how to know how much shares to buy. Okay, even if PDF will be there. David, sir, when my journey towards target, then we can shift my SL, then my purchase. If I cannot understand, David, please ask again. Ganesh, you get leverage, right? You get leverage. Anshu ma'am, you can please replay that same part. You can go back once again. Yes, you will get the software access trading view, don't worry. You'll get the access to the software, guys, don't worry. Sir, can you give a quick recap? Yes. Recordings will be available in the group, and quick recap is this. Position sizing is total number of shares to buy. In easy words, how many shares should we have? How much quantity should we buy so that we are at a safer side? Two boys were there, Raju and Varun. Raju and Varun both had 10,000 rupees, and this Raju used to just wipe out 1,000 rupees every trade. It easily means 1,000 gone per trade, 10 trades, Raju is completely bankrupt. Same Varun realized this, and Varun had a 100 rupees ka target. So anytime he lost not more than 100 rupees. So then he can take 100 trades. So we need to be like Varun. We need to make very less loss so that we can trade more and more. Okay. So how do we trade more and more? With this formula. First take out 1% of your capital. So my 1% of 10,000 is 100. So I know I can lose 100 rupees per trade maximum. Now I need to find out total loss per share if I am having. So buy price minus stop loss will be your total loss per share. So I know now 1 rupees I am losing every trade. Okay. So for example, I am losing any money in any particular stock, 1 rupees is my total loss in one share. Okay. In one share. And total I can lose in one trade is 100. Trade is referred to total quantity placed and then come out. Okay. And this one share is referred to only one. Formula is wrong, written total loss per share equals to total loss per trade. How it is wrong? Abhishek, how it is wrong? Total loss per share, what is the total loss per share? 1 divided by total loss in capital, total loss per trade. It is 100. Okay, vice versa. Sorry. Okay, vice versa. It will be 100 upon 1. Nothing else. The formula is correct. The placing is wrong. Okay, the placing is just wrong. So I just need to find out how much loss I can do in one trade. Okay, in one capital. So for example, I have 10,000 rupees. I know I can only do 100 rupees ka loss. And now I need to find out how many shares I can buy. Okay, I need to find out that. So what I'll do, buy price minus stop loss, which is 339 minus 338, which is 1. So I'll just place 1. So for example, if it is 5, I'll divide this. 5 ones are 5, 2s are and 20. So this will come to 20. But right now it is already 1. So I no need to divide this. So 1 upon 100 equals to 100. So I know I can buy 100. Okay, and now when you guys will practice this, you will figure out this yourself. Don't worry. When you guys will practice this, you will figure it out yourself. Profit you need to take out from your target, right? Nivya Bal Narayan, I already told you this is not a technicals class. Technicals, finding about the target, we will tell you later. Right now we are learning how many shares to buy. Please understand this. Okay. Now comes guys break even. What actually is a break even? So break even, the line suggests itself, it is a definition, a very easy definition. A break even price is the amount of money or change in value for which an asset must be sold to cover the cost of acquiring and owning it. What it is, I'll just show you in the maths. Okay, maths is what everyone likes. So this is break even. Plus 15 minus 15, 0. So after profit, loss, everything is 0. This is called break even. No, do not follow signals. Do it or yourself. Do not follow signals. Do it yourself. So it's like you are sitting on a traffic area and then you are asking someone to guide you the path. And then people are honking you from a back that please move your car. Anshumam, can you please replay? Because if I explain this again, then it will be a very big task. So please can you replay it? Because it will take another 30 minutes to just explain it again. Please replay guys. Those who are having problem, you have a feature of replay. Go back and watch it again and then come back again. I am live right now. Okay. Let's go. Let's talk about various cost for trading. Okay. So guys, what actually is a break even? Break even is 0, no profit, no loss. But again, there are some cost that will be there. Brokerage, exchange transaction charges, SEBI turnover fees, IGST, stamp duty. And the total charges per trade is rupees 40 to rupees 50. So even if you are at break even, you lose 50 rupees, 0 rupees, profit of 50 rupees, or you are at 0, no trade taken, or you like no trade taken, it is 0. But for example, you make 50 rupees and then you lose 50 rupees, you are at 0. Then too you have to pay this charge. This charge is compulsory for every trade you take. Okay, this charge is compulsory. Now what does this charge involve of? Brokerage, exchange transaction charges, CB turnover fees, IGST, stamp duty. All these charges are involved. Now if someone told me that Shashwat, when I was studying the stock market, if someone would have told me, Shashwat, you can save 20 lakhs, I would have literally saved 20 lakhs. My 20 lakhs are gone in charges and brokerages. Do you know? I spent 20 lakhs. You want to see the proof? Go YouTube. Okay. Just type a word named as Amrev. Just give me 1 second. AMREV. Okay, Amrev. And you'll see a video, 2 crore profit in a month that I did. You can just click over here and you can see what all the charges are. Okay, so I lost somewhere around 6 lakh rupees in charges. See, and I did have multiple accounts. So just think, if someone told me a secret way to recover this, not to save this, I could have done it. Yes, the same charges are there in Fires, but Fires has a very good technique of saving your money. I'll tell you, wait. So 5.69 lakhs I burnt to make 2 crores. Okay, I made a net profit of 2 crores, not even 2 crores net profit, 1.93. So I could have made 2 crores net profit with, if these charges were not there, I could have been at 200,000. But I made only 1.93 crores. So again, at this particular time, what to do to avoid these brokerage? Because this brokerage will take 40 rupees per trade. Initial capital I used was somewhere around 2 crores itself. Savan Kumar. Okay, now let's come to a thing. How could I have saved this much money, this 20 lakhs, if someone guided me at the right time? Because I used to trade on my own, I used to read from the books, guys. This was my condition, and I didn't knew about this Fires. Give me 1 second. Okay, so no one told me about Fires. If I knew about Fires, I could have literally saved the money. So how? See, Fires has a 30 days challenge. If you turn this challenge on, all your brokerage will be refunded if you are profitable. So in 1 month you can make profit. Let's say, can you make profit in 1 day? I will say no. Can you make profit in 2 days? I'll say no. Can you make profit in 3 days? I'll say no. But can you make profit in complete 1 month? I'll say yes. And if you are profitable in 1 month, you get all your charges back only at Fires. So this is the thing. You get all your charges back. Now there's even a catch. They usually charge 1000 rupees for one account. So if you want to open account, they will charge you 1000. But again, there's a surprise for you all. If you guys open with our referral link, you guys get exactly for free of cost. This is valid only for the next 1 or 2 days. So go get your link. The referral link for this free account is in Telegram. And make sure when you are opening account, you turn on all the segments, future and options and everything. So go open your account. The Telegram link is there in the referral link is there in Telegram. So again, if you want to save your brokerage, because I personally believe the money saved is the money earned. Coming to the next part, technical analysis, we will learn about this tomorrow. So thank you so much for watching. And now coming to a part, please go and drop a review on my Instagram. How was the class? This is my Instagram ID if you want to follow me. So I'm gonna send you the chats. Until then, you can even ask me the doubts you have. So guys, I'm sending all the Instagram links over here. Go and just follow me and send me a review. How was the class? Did you really like the class? Sending the link on the YouTube chats. Please go and please send me a review. How was the session? Let me know if you really like the session or if you really hate the session, so I can improve in the coming classes, guys. I can improve in the coming classes. And if you have any doubts, you can ask. Ganesh, you can check out my Twitter itself. Yes, the session is in Discord. The PDF is in Discord. Yes, Narendra, you can check their terms. They have a minimum profit, I think, so of 1,000 rupees and every month, and you can make that. I suggest. You are unable to read the PDF. Okay, I'll share a new copy. Don't worry. Okay, I'll share in Telegram, guys. Don't worry. Anshu ma'am, I told you, please go for the replay sessions. If then also you're not unable to understand, message in Discord, I'll explain you. Okay guys, thank you so much for joining the session once again. I hope you send the review. How was the classes? Please go follow and send the review. So I'll see you at the other class. Thank you so much for